Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news China's juicing up more economic stimulus to weigh against slowing growth there. But first, the third quarter American economic growth number has been revised up marginally, now at 2.1%, up from 1.9% in the earlier estimate. And their inflation rate, the inflation rate the US Fed watches most closely, core personal consumption expenditure, slipped back a little to 1.6% excluding food and fuel. That's in the October reading, reversing the rise we saw in the prior 2 months. American personal income growth, however, stalled in October, and the first time that's happened in more than a year. Disposable income fell, and that hasn't happened in more than 4 years. American durable goods orders in October have come in marginally better than expected. A small retreat was expected, but a small gain was reported from September. But compared to October 2018, durable goods orders are now 1% lower. The capital goods component, however, has a 2.3% rise year on year. Contraction in their industrial heartland continues, and that's not a good sign. The Americans are now moving into their long Thanksgiving holiday weekend, and market activity will be limited there now. But all eyes will now shift to retail sales levels, and many retailers are nervous. In China, officially reported industrial profits fell almost 10% in October from the same month last year. And more stimulus is on the way in China. Their Ministry of Finance announced an early allocation of 2020 special purpose bond quotas totaling 1 trillion yuan to provincial governments to step up investment in infrastructure such as roads, sewers and public services. In Australia, there was some grim construction data released yesterday. The value of commercial building work completed in the September quarter was down 5.5% in a year. The value of residential building work was down 10%, and the value of engineering work was down 11.5%. The US Treasury 10-year yield is now 1.77%, which is a 3 basis points rise from this time yesterday. Gold is down $4 to $1,455 an ounce. US oil prices are lower at just under $58 a barrel. The Brent benchmark is just under $64 a barrel. And the Kiwi dollar is continuing its stable run against the greenback, up slightly to 64.3 US cents. On the cross rates, we're also firm at 94.8 Aussie cents, and against the euro, we're firm at 58.4 euro cents. That puts the trade-weighted index up to just over 69.7. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.